Why do community lending institutions need their Federal Home Loan Banks? Well, every place in America needs capital and credit flowing to it. That's the money that keeps a city or a town or a county growing and vibrant. Now, one way to gather that capital is for local banks to take deposits from local customers and then lend that same money out when those local customers need credit. That's your basic George Bailey, It's a Wonderful Life model. And it still works pretty well. But usually, these days, it's not enough. So remember, there are investors all over the world looking to put their money somewhere safe, where they will get a return, just the same way those local depositors expect both safety and a return on their deposits. We call those investors the global credit markets, and they can be pension funds or multinational companies or sovereign countries or even super wealthy individuals. Now, by belonging to a federal home loan bank, a community lending institution expects their home loan bank to go out there in the global credit markets and borrow large sums of money from those institutional investors so that home loan bank can then turn around and lend those exact same funds to their own members, those community lending institutions. By the way, just as a side note, you might hear the word liquidity thrown around from time to time. And this scenario that we're drawing up right now is a very good example of why people use the term, because money flows constantly. Maybe not like we want it to sometimes, but it does flow like a liquid, and it flows back and forth all over the world all the time. And the trick, if you will, in this case, is to maintain a reliable and efficient way to move that liquidity more directly to your local community so that you see hometown loans being made to families and farms and businesses and local organizations and governments. And by the way, you hear me say reliable and efficient, and those words deserve some emphasis. This whole mechanism we're talking about, local lenders looking to their federal home loan banks to provide a flow of funds, the whole thing is based on those two ideas, that the home loan banks will raise those funds at the lowest possible cost. That's the efficient part. And they will do so in both good times and not so good times, or as we more formally say, in all economic cycles. There was a real-life example of that during the 2008 financial crisis. The Federal Home Loan Bank stayed strong then and didn't take any bailouts. But the bottom line is communities need the Federal Home Loan Banks because community lending institutions need them to be there even when there are few or no other sources of credit available. Because that flow of lower cost funds creates jobs and supports economic growth and helps provide better housing and home ownership and community development opportunities. And that's why community lending institutions are so important to every community, and it's why they need the Federal Home Loan Banks. In fact, a better name for them might be the Federal Hometown Loan Banks, because without access to funds from their Federal Home Loan Bank, most community institutions would find it hard to reliably support lending in their own communities.